Okay, hi everybody. Thanks for coming to this webinar today. It is our webinar on the Aetna and 401k benefits. And I'm Allie, your membership services manager. And today I have with us Mr. Defo Spencer, who will give a little intro about himself.
Thank you. Good morning, everyone. My name is Defo Spencer. I'm with Spencer Benefits. We're an employee benefits firm locally here, and we specialize in employee and executive benefits. Got 34 plus years experience in the industry. I've been a longtime member of AGC and look forward to sharing information about this benefit with you. As a panelist and to assist with this presentation is Daniel Taylor with Transamerica. So,
yeah, I'm Dan. Thanks everyone for joining today. I've been with Transamerica for about 10 years. I'm called the Key Client Development Manager here. My job is to just help spread the word about the program and make sure it makes sense and you know, just kind of paint the picture, and I'm here to support the program any way I can.
All right, okay. From there, I'll let you take it away, Defo.
Great, thank you, Allie. I'm gonna turn my camera off so I can look at my notes as we go through there, but we have two member benefits to discuss in this hour, and we're going to spend the first 30 or 40 minutes, I guess, on the 401k, and then we'll pivot to the Aetna health insurance option. But I guess if you have questions along the way, if you could just chat or message to Allie, and then we can get them addressed during this presentation, or else you can certainly call me directly after the meeting if it's something you would like to discuss privately. Our goal is to provide you an overview of this multiple employer plan 401k, which is exclusive to members of AGC of East Tennessee. So you must be a member in order to participate, and you also must be in the industry. There are members who are associate members, I guess, then they are not eligible. So you must be in the construction industry or derive your business from that in order to participate in it. It's truly a great member benefit because in the spirit of an association where members help members, there's a lower cost for everybody. The more members that participate. So you do have a strength in numbers, which is, you know, kind of reflective of an association anyway. You met Daniel Taylor. He's with Transamerica, and Transamerica serves as the record keeper for this plan. They provide many of the critical functions for the plan for the employers and the participants. And I also might add that AGC of East Tennessee is one of several AGC chapters across the country to have this as a member benefit. And Transamerica is also the record keeper for them as well. So Transamerica as a company is truly a leader in this space, and they have much experience and expertise. We'll talk about the agenda. We're going to discuss the difference between a single and a multiple employer plan. Then we're going to talk about administrative support, fiduciary risk management, investments, employee education, pricing, and then we'll wrap it up. And as Transamerica is one of the largest provider of retirement plans, Daniel is going to be addressing this first item and the differences between a single employer plan and a MEP. So, Dan?
Thank you, Defo. Yeah, so I always like to start my consultations out by saying a lot of employers aren't aware that there are different types of 401ks out there. There is your traditional single employer plan, or just your standard 401k that most people are familiar with. And then there's what's called the multiple employer plan. And the primary difference between the two has a lot to do with leveraging the fact that you're part of a group of multiple employers with a multiple employer plan, as the name sort of insinuates. What I want to talk about first is what a single employer plan is that you're probably most familiar with, and then we'll talk about what the multiple employer plan does. And I can tell you, if you're looking at both options, generally speaking, the multiple employer plan is going to be the more desired between the two, but they're harder to get into unless you're part of some kind of affiliated employer nexus, which you are with your membership in AGC of East Tennessee. The only other way you could get into this kind of thing is if you're a part of some kind of franchise or some other sort of PEO structure. So the fact that you're already part of this program, as Defo said, gets you the leg up and allows you to even consider a multiple employer plan. So let's just sort of paint the difference here. A normal single employer plan, traditional 401k, has fiduciary liability, trustee duties, administrative costs, and busy work, audits, and plan design consultations, as well as the standard education and enrollment that's required of a typical 401k. A multiple employer plan allows you to leverage the benefit, as the name sort of alludes to. Rather than you being seen as your own entity, you are seen as part of the aggregate group of employers. So suddenly, rather than starting with $0 or maybe $1 million or 10 million, if you already have a traditional 401k, all of a sudden you're seen as part of the aggregate for all the members of AGC of East Tennessee. And that translates into asset pooling, which is typically better pricing, because all of a sudden now you're seen as a much larger entity. There's kind of three benefits to a multiple employer plan in terms of relation to the single employer. First being that asset pooling. The second is the benefit that you're part of, the fact that you're part of the AGC of East Tennessee. You are no longer seen as the lead employer, and that actually becomes AGC of East Tennessee, a familiar face, and they take on the duties, the administrative busy work that would normally be on your shoulders. So the second benefit is that AGC of East Tennessee takes the bulk of that administrative task, and Defo is going to give you more color around that. And then the third and final benefit is really there's a lot of fiduciary offload as well. So it's, again, just another benefit to the difference. And one of the things you retain, as you'll see here, is the custom plan design. Even though you offload a bulk of the responsibilities as well as a bulk of the fiduciary responsibilities, you still retain some of the nice features of a traditional 401k, and that is the ability to design it and make it custom to your preferences. So I'll turn back over to Defo for talking in more detail about the administrative offloads and fiduciary, et cetera.
Okay, sounds good. Allie, if you could move us to the next slide. We'll get into what is really the theme of this presentation, the top 5 reasons to join the plan. And reason number 1 is the administrative offload. You just heard the difference between the single employer plan and the multiple employer plan. And if you are a single employer plan, you or your company, you establish a direct relationship with that 401k provider. And someone at the company is the trustee. And that trustee is responsible for and accountable for a good many of the administrative duties that go with having a plan and responsibilities. All of these are governed by the Department of Labor, and they follow the law set by ERISA law. So there can be fines and penalties for non-compliance. So there's a lot of responsibility that goes with being a plan sponsor. So the administration can be awful time consuming. Some of the duties that are involved are like the contribution submission and tracking, eligibility tracking, distribution processing, employee loan distribution and approval processing. You've got tax filings, handling employee deferrals and election changes, investment reviews, compliance and legislative supervision. Many companies just don't have the personnel to handle these duties, and time is money, as the slide says right there. So many of the duties and responsibilities that go with them are time sensitive, and as such, they carry a little extra risk too. There'll be a risk of violations if they aren't done in a timely manner. Plan-related documents distributed, employee notices, and things like that. They all have to be disseminated in a timely manner. This lists some of the tasks. The AGC multiple employer plan has a service built in to assist adopting employers. It's called PASS, P-A-S-S, which stands for Plan Administration Service Support. And it's built to assist the groups in the plan with these duties. It really transfers many of them to either Transamerica, the record keeper, or the third-party administrator, and frees your time and time of your staff in handling it. One example that I will give you of this is that Transamerica tracks the eligibility of employees and mails kits, enrollment kits, directly to their home. ERISA requires that this information be given in a timely manner, and so all of this can be handled with the PASS service done by the plan through the MEP. So administrative offload is one of the big reasons. Reason number 2, fiduciary risk management. And this is a biggie. As a multiple employer plan, AGC of East Tennessee, the chapter is actually the plan sponsor. So this aspect of it falls on the chapter, and the investment aspect is a vital role to a strong 401k plan. To help with this, this plan incorporates a third-party monitoring firm called Mesirow to oversee the investment mix. And they also stand as a co-fiduciary in the plan. So you can feel comfort in knowing that the investment lineup is solid. They're all graded. All the investment options are graded, and Mesirow reports quarterly to the plan sponsor. They have what they call a police report, POLICE, which stands for performance, organization, legal, investment policy, consistency, and expense. So all the investments are graded. If funds are removed that don't perform, so certainly comfort in knowing that the lineup is solid. Reason number 3, investment flexibility. Piggybacking on the Mesirow, knowing that your lineup is solid, there's 30 different mutual funds available from various fund families. All of these are what they call zero revenue funds. So the expense ratio in there is solely for the fund management. There's no excess that goes anywhere. So this is the lowest cost mutual fund option available. And this lists some of the fund families involved. You got Wellington Management, Vanguard, Pacific Investment Management, PIMCO, Capital Research, JP Morgan, FMR Company, all recognized fund families with various asset classes represented. Diversification in a portfolio is very important. And
This is Dan. I think we're having technical difficulties with Defoe's microphone. I'll kind of pick up on this slide here. There's a wide array of familiar faces to choose from for funds for your employees. You can see that it ranges from the usual suspects, and as far as asset classes go, there's a wide array as well. A lot of times, employers making decisions between their fund options want to make sure that they can meet the needs of the different types of preferences, from asset allocation investments to index funds to target date funds, which tend to be the more popular or common choice today. A lot of times, Allie, if you go to the next slide, please. A lot of times employers are looking for an option that helps their employees navigate as they near retirement. I need investments that are going to become more and more conservative as I approach those years of retirement.
awesome, thank you. Okay, last thing we talked about was the various fund families and fund options, and that's all great. What if employees never changed? Well, the reality is that just doesn't ever happen. Family situations change. We all experience changes. Even this pandemic is a big change for everyone. Here's a stat from a couple of years ago. It says 5.1% of plan participants changed the allocation of their account balance. Well, that means 95% made no changes. Another stat, 3.5% of plan participants changed the allocation of future contributions. Well, that means 96 to 97% did nothing, which underscores the importance of having a self-completing strategy in the mix. And this is especially important as employees approach retirement. As you know, there's a risk return reward that's greater the longer the time horizon. And as you near retirement, you really can't afford the risk. So allocations must need to change in order to protect from that market risk. So the AGCETN has target date investment options in the mix, and each of these have a date, and this date is closest to the projected retirement date of the participant. It has diversification already built in. The farther out you are, the mix of assets are more aggressive. Closer to retirement, the mix is more conservative. And this mix I'm talking about is a mix of stocks, bonds, and cash equivalents that are all part of the fund, all in one fund, so you don't have to go to several places to get that diversification. So as you get closer to this one fund, if a participant is in there, as they move closer to that retirement date, there is a glide path involved, and the asset mix will change automatically. So it's truly a self-completing strategy that kind of puts everything on cruise control. They're very popular. 40 to 60% of the participants in the plan are in these target date funds. And the stats that we just saw earlier kind of underscore the importance of having this self-completing strategy in the mix. And the target date funds that are a part of this program are the BlackRock. And when I checked not too long ago, there are more total assets in the BlackRock target date funds than any of the other fund families involved that have these similar investment options. So you've got comfort in knowing that there's a top tier option in this regard. Now, another aspect of the plan, we're going to move to the next one, is communication and education. And I'm going to let Daniel speak to that. Transamerica, again, has top-notch communication and education material. So, Dan?
Yeah. So a lot of employers ask, so what is the employee experience going to be? When they log into the 401k, what do they see? What do they go through? They experience Transamerica. They experience all the bells and whistles of the program. Again, part of that has to do with the fact that you're seen as part of the aggregate AGC of East Tennessee program. So nothing is held back. You get access to all the education resources and materials you can imagine. Transamerica is in one of the top 10 web resource education programs in the nation. So that means that your employees can go out and experience things like our On Track program, which is a feature on the website that allows them to see how close they are to meeting their goal, the retirement income goal. They receive that report in sort of a unique way. It's actually a weather report that indicates whether they have cloudy skies, sunny skies ahead. And that makes, believe it or not, for some interesting and good conversations amongst employees. A lot of times folks won't talk about retirement plans with their peers because they don't want to divulge too much information. But the beauty of something like the On Track is that it allows those employees to have great conversations without disclosing specific details, but ultimately just driving towards participation, which, as we know, if all of these great features of the multiple employer plan aside, if you don't have employees joining the plan and participating, it's all for naught. Transamerica also assists you in driving up participation by providing enrollment education meetings and webinars for your employees in light of the COVID crisis. Obviously, most of those are all webinars right now. We have top of the line education certified specialists that are bilingual as needed to present just the benefits and the concepts of compound interest and saving money.
Okay, I'm just going to piggyback on Daniel's comments about the education, how important that is, and I'll just mention that my commitment to the adopters of AGC East Tennessee is that I will visit with all employees. I will do employee meetings at any hour. I have some groups that actually have me come meet individually with new employees as they come on. I'm happy to do that. I leave my business card with all the participants, and they are invited to call me at any time. It has my cell phone on there. If they have a question about their plan, it can be after hours, over the weekend, or whatnot, and they get their quarterly statement and have a question. So anyway, that's my commitment to support the plan as well. Reason number 5, the economies of scale pricing. You've heard earlier about how larger plans have lower costs, and we've got the asset pooling involved here with the multiple employer plans. This is a list of this is the pricing of this plan. You see client fees. There's a $250 one-time adoption agreement fee that basically pays for the documents to set up. There is a $500 annual administration fee for plans with assets of less than $350,000. Now, any plan that comes in larger than that transfers in. Obviously, that's not a factor. Startups would have that until they got to that level, and then it goes away. And you have participant fees. You have a $25 annual fee per participant. That's really pretty much pays for the administration. $25 is less than many of the banks, and it kind of sets up the accounts and whatnot. The linear fund expense we talked about earlier a little bit is the zero revenue fund expense that goes with the mutual fund offerings. And then there's a contract asset charge that varies based upon the size of the overall plan. And I think it's currently like 1.24. The more that come in, the more groups that come in, that goes down. You got price leverage through buying power. You've got all of these services that are handled at the adopter, at the plan sponsor level by the chapter. One 5500 form for the chapter. It's not per group. Worksite employers with over 100 employees usually have to have an audit. They would have to have an audit if they were a single employer plan. But again, that's done at the plan sponsor chapter level. Document preparation, compliance testing, all included. There is a third-party administrator called Retirement Plan RPA in Atlanta, Retirement Plan Associates in Atlanta, and they handle all of this stuff. They do all the compliance testing and whatnot regarding it. And you heard earlier that you have the flexibility to set up your plan the way you want it. Some will want to match, others will not. Some will want profit sharing, others will not. So you got the flexibility to create your plan as you wish. If you have an existing plan and want to do a comparison, we can certainly do that and give you a comparison of the pricing of it. That's all we have. Again, if there are any questions, I can answer them now, or if you can chat Allie, or else my contact information is available. We can discuss privately afterwards. Well, we're going to move to the next insurance benefit through the chapter, and it's the Aetna medical insurance. And I wanted to introduce Jeff Dempsey because he represents Aetna in this area, and he's going to be here taking part, helping with this presentation as well. I kind of wanted to start by giving an overview of the environment that we're in right now post ACA, and by ACA I mean the Affordable Care Act or Obamacare. The majority of groups are smaller, and the smaller the ACA dividing line was 50 lives. So if you're a group that has less than 50 eligible lives, you're community rated if you have a fully insured plan. And there are only 2 carriers in our local market that are in that space. You have absolutely no control over your rates for health insurance. Your plan designs are somewhat limited. You've got metal levels. There's actually 4 of them. And each plan design within the metal level has to be within a certain actuarial guideline of each other. So somewhat restrictive, no flexibility, no control on pricing. Aetna offers an opportunity out of this. It doesn't work for everyone, but because there's underwriting involved, but it is the only avenue that small groups have to possibly save some money on their medical expenses. And because of the AGC and the sponsorship, AGC members will get approximately 2% off of final rates. Additionally, the group size goes down to 2 lives. It was 5. So because of the AGC sponsorship, 2 life groups are able to take advantage of this plan. Now, the Aetna AFA plan is what they call a level funded plan. That's a variation of self-insurance. Now, that means that underwriting is involved with this. So the rates that groups will have is going to be based upon anticipated claims. Everyone has to fill out an individual medical questionnaire, and Aetna, the carrier, will predict claims, and that will be the basis of the rates. The premiums will not go up through the plan year. So once you get your rate, it's going to be the same through the plan year. If there's a surplus at the end of the year, because it says self-insured, money will come back to the group. So there's an advantage there. If there's a deficit at the end of the year, there's no further obligation to the group to pay any more than what that rate was through the year. You'll be given a renewal rate to continue the plan. You will have plan flexibility not found in your ACA plans. I think there's 60 to 80 different plan designs and 3 different networks. So you have a lot more flexibility from that standpoint. Now there are other level funded companies out there, but none have the scope of services and value adds that Aetna does, and no other one has an AGC discount. So the time we're going to spend today is really going to talk about these value adds and how it separates from the others. And the first one you can see right there is the extended care program. Let's see, I missed one slide. So the extended care program is a program that provides 20% off on thousands of CVS health branded products that the employee registers for in the program. If you'll recall, a few years ago, CVS bought Aetna. So a lot of the value adds are going to be because of that relationship right there. But the extra care health benefit provides a single card through CVS. You might already have a card through CVS that in which you get a 2% back on the extra bucks, but there's an extra 20% off if you're a Aetna subscriber through this AFA plan. Let's see, is there a next slide, Alia? Yeah, maintenance choice. Pharmaceutical drugs make up the largest percentage of the claims of any medical carrier. And so this CVS and Aetna affiliation is going to be able to help. These plans come with maintenance choice, which allows you to get a 90-day fill of prescriptions for a 60-day cost and home delivery at no charge. So you're basically getting 3 for the cost of 2 in this scenario. So that's another tremendous benefit to that. Okay, next slide. I think I'm gonna in Minute Clinic. Now, I think this is huge. This is a biggie. You are able to go to any of the Minute clinics at no cost, no copay, no cost at all to you. And you know, there's 2 or 3 locally, but you get into situations where you need to go after hours, where your primary care physician may not be available. If you're travel or you're out of town, which, you know, happens a lot in the construction industry especially, it's nice to know that you can access these Minute clinics at no cost. I think nationwide there's like 1,100 Minute clinics total, and you know, they can even write prescriptions at the minute clinics. I've used the minute clinics myself when I couldn't get into my primary care physician, and they're convenient, they're easy, so they really work. Okay, next slide. I'm gonna let Jeff take over here and talk about there's a lot of wellness benefits built into the plan, and he can speak to those much better than I can. So, Jeff.
Well, thanks, Defoe. The first slide that you see here is about get a new Apple Watch, and we have a program called Attain by Aetna. It's more than just an Apple Watch program, but it is a program where you can utilize an Apple Watch, and we will allow members, employees and their spouses or dependents ages 18 or more, they can go in and purchase an Apple Watch, and then they can pay for it over 24 months. And they can actually allow Aetna to pay for it by earning points, utilizing that watch as well as the other parts of the program. If they already have an Apple Watch, they can earn up to $80 in gift cards. There's like a $7 one-time activation fee, and if you want to upgrade to a more current series, you can, etc. So, next slide. And this is where I wanted you to see the Attain by Aetna. It is a first of its kind health experience. The actual goals that are established through the Apple Watch program and the Attain by Aetna are personalized. So for example, even though I'll just use the example of Defoe and I are pretty close to the same age, and you might think since we're both males, we're both close to the same age, that our goals would be exactly the same. No, they could be uniquely different. And so it is designed for each member to have their own goals, and based upon the way they utilize that, those goals can increase or they can go down based upon, again, their utilization. But they can earn points, and through those points they get healthier, and they can earn for Aetna to pay for the Apple Watch. So it's a great program. We have a lot of members that utilize that program. I actually utilize that program myself. Next slide. Here's another benefit, especially to the employees of your businesses. It's called PeerFit. It is a third-party vendor, but what we do with Aetna is we give every member a certain number of credits. I believe it's like 40 credits each month. They can use them or they lose them, but they can use them by going to PeerFit, registering, and then finding out where there might be some fitness classes in their area, and utilize those points, and we'll actually pay, Aetna actually pays for fitness classes. Personally, I don't know of another carrier in the small group space, 100 and under employees, that's doing this for their members. And it's a way for them to be healthier. And if they're healthier, everybody wins. They win. Their healthy employees are going to be better employees. And then not only does, Aetna wins and the group wins with regard to potentially getting money back on their claims, because they're probably going to have less claims. So PeerFit is a great benefit. Now, I will tell you that benefit is only at the employee level. So it's only for the employees. And they can, again, this just shows the process. They can register, they can find a class, they redeem the credits, and then they can go work out. Now, the good thing that they can do is if they are a member of a gym or some type of facility like kickboxing, yoga, or whatever, that's not a member of PeerFit, they can nominate those and get them connected with PeerFit. Obviously, that's a contracting relationship between that gym or provider and PeerFit, but they can nominate those if there's not a lot in your area, or if their specific favorite place is not in the area. But it is a win for everyone, as I indicated earlier. Next slide. One of the things that we've seen that has really been critical, to be honest with you, in the last couple of 3 months is an employee assistance program. This is baked into all of our plans, even down to 2 members, and it is included for everyone. It's called Aetna Resources for Living, and everybody, as long as there's 1 member in the household, everybody in the household can utilize this benefit, even if they're not a member. So let's say you've got someone who takes employee only because maybe the spouse has the spouse and kids covered through a different plan where they work, they can still utilize the employee assistance program. And if you'll hit the next slide, Allie, what you can see, here's what they get. They get legal guidance. So there's free initial consultation and reduced rates for legal services like a will preparation or mediation. They can access financial guidance. So they can get a tax consultation, credit counseling, budgeting. They get initial consultation and again, reduced rates. Most people use it for the emotional well-being, and there are at least 3 face-to-face or televideo sessions per year for each person that's covered by that. And then, of course, if they need additional services, then they'll have to go to their health plan for that. And then there's also work-life resources that are available. So if somebody's having difficulty with issues like child care, elder care, etc., then there's somebody that they can talk to and that will hopefully point them in the right direction. So as I've said, with the advent of the COVID-19, this has been what we've seen as one of our most utilized benefits in the last couple, 3 months. And next slide. And they can have access to 24/7 access to the resources, and we can provide you with an employee assistance program flyer for your employees and for the members to have as well. And then some additional value adds. Another benefit that we've seen, especially during the COVID-19, is Teledoc. Teledoc is baked into all of our plans. It's currently $40, or it is the primary care physician copay if that is less. And they can either speak to or even televideo conference with a doctor, a physician, and they can make sure that they're getting the care they need. Obviously, this is not for acute care that is needed at the hospital or emergency care like a broken leg, but if somebody's got a bad cold, child wakes up with an ear infection, etc., it's a great way. Defo talked about our Minute Clinic benefit. Between that Minute Clinic and this Teledoc, then your employees that travel quite a bit are going to have access to management at their fingertips. So we really think that's a really value add. We also have a disease management clinical review. You can chat with a nurse or doctor. We have discount programs that are baked in. An example of that would be vision supplies that are available at a discount. So what we've tried to do with the Aetna and the additional value adds, and I think this is why Defo wanted me to speak to you, is that what we've tried to do is we've tried to give the small groups all the way down to 2 employees the feel of a large employer benefit plan. And the Aetna Funding Advantage plan does that. And in conjunction with the Associated General Contractors, you get discounts on those rates. So we think it's a win-win for everybody as well. Allie, is there another slide? Yeah, we can provide you with a value-added programs flyer. So if you move to Aetna, we can make sure that you get this flyer. And in this flyer, it outlines and gives a brief description of all of these programs. And if there is a specific program that you want more information on, we can provide that as well. We feel like this flyer gives you a great overview. And then if you want more information, you can request it and we can give you information on Teledoc. We can give you information on the EAP program, PeerFit, the Attained by Aetna, or whatever. With that, I'll turn it back over to Defo.
Okay, great. And just to wrap it up, most people, when they get a medical plan, there's a lot more to a medical plan, I'll put it this way, than a plastic card when you go to the doctor that pays the claims. And that's especially true of this Aetna AFA plan. There are so many value adds that increase the value of that plan in terms of maintaining health and easy access and flexibility. It just they're more than any other carrier that I've seen. So anyway, it's a tremendous member benefit. do we have any questions we can answer now on this?
Yeah, if you have any questions, you can add those into the chat box now. If you would prefer, like Defo said earlier, you can reach out to him directly, or you can contact me to get you in touch with him, whichever is easiest. So thank you so much, Defo, for presenting today. I think that everything you guys talked about was super helpful. I definitely learned a lot. So yeah, I appreciate it. And thank you for taking the time.
Thank you for the opportunity. And if there's anything I can do to support these benefits, just let me know.
All right, awesome. Well, I hope everyone has a great day. And yeah, thanks.